Hello, everybody, and welcome to another episode of the Great Indian IPO Show. And in today's episode, we are going to be discussing the fortunes of the forthcoming IPO of Root Mobile Limited. The 1,000 crore Root Mobile Limited is a cloud communications platform as a service solutions provider. It provides solutions to enterprises, over the top customers, and mobile network operators. Its 1,000 crores revenue is primarily distributed among messaging services. In FY20, these revenues were around 928 crores, while a very small portion of it is also towards call center or BPO services, which is less than 3% of its total turnover. The messaging services, which is the bulk of its operations, is largely catered towards enterprise and mobile network solutions, and it is responsible for providing seamless communication services which are omni-channel in nature. It is two-way. They provide other services like RCS, business and IP messaging, UR shortening, enterprise voice solutions, as well as IoT solutions. In mobile network solutions, it is providing SMS firewall, communication platform, and instant virtual number services. Practically, the whole world is Root Mobile's business playground. It has operations in 18 countries across 4 continents. It has presence in high potential markets like the emerging Middle East and Asian markets. They have a strong presence in India, APAC, North America, and LATAM markets. It primarily operates in the A2P industry, which is expected to grow at a 5.8 CAGR versus the 4.8 CAGR that it clocked historically. The basic advantage of Root Mobile is that it has economies of scale, has significant barriers to entry, and it has significant high quality of services with flexibility of operations. So its relationships with clients are further strengthened with value-added services which it provides, such as SMS analytics, firewall filtering and monetization, route hubbing, and instant virtual number services. So let us understand how the issue is structured. The issue is for 600 crores and it's a fresh issue of 240 crores, while another 360 crores is available for offer for sale. And the objectives of the issue is for business acquisition and joint ventures worth about 83 crores, purchases of office space in Goregaon, Malad area where they want to have their own office, and they budgeted about 65 crores to that. Then they have repayment of short-term borrowings of 37 crores and expenses related to office compliance and regulatory purposes of around 55 to 60 crores. The key takeaways of why you should be investing in this issue is the fact that there is a strong growth outlook with multiple nascent geographies in which it operates. So there's significant room for revenue generation. Digitization process is becoming increasingly central focus for all corporates, and this is where the company operates. It had a revenue CAGR growth of about 27.9% over the last 3 years, and this is likely to continue going forward. And earnings growth momentum should keep pace with revenue growth. Currently, the rich valuations are expected to persist, given the fact that the strong earnings growth outlook is expected to continue. So let's have a look at its financials. You can see that it had done 956 crores of revenue for FY20, and in Q1 FY21, the pandemic quarter which went by, it did about 310 crores of revenue. So we will see that already about 33% growth is being bundled into operations. However, we have been very conservative and we have assumed that revenues will grow at a slightly moderate rate. So this means that we are expecting 1124 crores of revenue this year and going to about 1741 crores in FY23 for a CAGR growth rate of 22.1%. So in line with revenue growth, EBITDA is expected to grow from 99.8 crores in FY21 to virtually grow a little more than double in the next 3 years to 205.7 crores for a 27.2% CAGR growth rate. And net profit, which was clocked at 69.1 crores in FY20, is expected to more than double to 134.1 crores, growing at 24.7%. This is fantastic growth. Tell me, how many issues do you get in the market with these kind of growth rates, right? And the return on equity is also very impressive. It is 25.6 in FY20, but it is expected to drop given that we are seeing new capital being raised. However, if you see, the return on invested capital is expected to start crawling back up about 20% in 23 when we expected it to be around 22.9%. The historical EPS was at about 13.8, is expected to move to 23.6 on a fully diluted equity, and at 14.8 times FY23, the stock is available at a very reasonable valuation, and hence we recommend a buy. Let's see how the valuations of this stock compare with the other players in the market. So you will see that it has got one of the best return on invested capital, and it has been offered at the lowest PEG ratios. So I think this stock, with its growth prospects and being catered to the emerging industries and the digital processes which are becoming central to every organization, offers a lot of value at the IPO price. So the Root Mobile IPO is going to hit the market on the September 9th and will be available till September 11th. The offer price is in the band of 345 to 350, right? And the minimum lot is for 40 shares. So do subscribe to this issue, and of course, don't forget to subscribe to the Great Indian IPO Show. If you have any queries regarding this IPO, please write in the comments below the video and we will get to you at the soonest. Until next time,